Hi everyone, welcome to this week's edition of the Monee Talk NGX weekly heat map. Last week, I shared the document showing the heat map for the performance of the NGX last week, but the feedback I got is that you need an explanation or further information on that image doesn't do justice to the performance, which is why I'm recording this to support the document. But before we go into that, I'll also be talking about what really happened during the week and what could have driven those things, the key drivers for those. So the first thing is to look at what actually happened during the week. We saw that we had 10 gainers, 78 losers, and 55 stocks remain unchanged. And the next thing is what could be the factors that could have led to this. So one drivers for especially the financial service sector is the CBN's new old core rule. The central bank released two draft guidelines that would fundamentally restructure how bank holding companies operate. The draft says holdcos like GTCO, Access Holdings, First Holdco can no longer interfere in their banking subsidiaries' day-to-day operation or credit decision. They also must hold an additional 20% share capital for what they are above what their subsidiaries need, and the subsidiaries cannot share the capital between them anymore. For investors, this was a direct hit on the holdco model that made some of these stocks attractive in the first place. The market is probably repricing the risk now, and while the draft is still open for comment, this has impacted the market negatively. The next thing is the NGS pricing movement change. We'll talk about this in the next sector, in the next slide. The third thing that could have influenced it is the fact that the government bonds will be coming out today, and the expectation is that it would be between 16% and 22%. And this is a major one for institutional investors. I'm not sure many of them would want to invest, so they'll be pulling out some funds from the liquid stocks, which the financial service sector is one of the top ones, and keeping it for the 1.2 trillion bond auction that should be coming out today. Yeah, as I said, the NGS has changed their pricing structure to a tiered pricing structure. This means that stocks like Aradel, Airtel Africa, Dangote Cement that are over 1,000 naira only need 10,000 units traded for them to change in price. And you see in the following month, these stocks will be changing more because prior to now, they needed 100,000. Same applies to stocks between 500 and 1,000. So the likes of Bar Food, MTN, Total, etc. need only 50,000. We also have those under 500, which is where the major bulk of the NGX stocks fall, and this remained unchanged. So you still need 100,000. So if you see, the bank sits in Group C, so the tiered structure doesn't affect them. So the key drivers for the bank would the CBN old code draft and then the board yield rotation. Next, we'll be looking at the top losers in the markets. The first person we'll look at here is International Energy, who was the top loser. However, there is no need to panic here because prior to this week, the stock itself has gained over 175%. And this pullback is not a collapse of the stock itself, it's just probably people taking some profit. And when the sector falls, stocks that have really run would be impacted largely. The second stock here is First Holdco. Like I said, this was a direct hit based on the NGX or the CBN's Holdco regulation. And you'll see other stocks as we go on. We also have John Oat, and we have NACO. Both are lower liquidity names. So when the market is bleeding money to the bonds, the way it did this week, we expect that thinly traded stocks like this will be hit even harder because there simply aren't enough buyers to absorb the selling. Zitis Agro is another thinly traded stock, and they also ran a lot following their listing on the NGX to the extent that they were suspended at one point. So this is not a surprise that they are experiencing this hit. We'll be moving on to the gainers. Like I said, we have only 10, and these are the top five. We can see that the top one is 11.01%, which is Cornerstone Insurance. This we expect the insurance company will benefit from the high yield environment, and this is some people trying to get into this sector early on, and we expect that the float they owed would benefit from the high interest bonds and the likes before claims are paid out. Well, Academy Press and Conway both rose over 8%, and we saw that Conway was traded highly, so there was an huge demand for Conway during the week, and this led to the increase in price. Academy Press is also thinly float, so just a modest volume can move the price significantly. We have the Nimitz for international pharmaceuticals, and this is a small cap move. This limited signal beyond this week, so there is no for most of this stock, Ikeja Hotel and Nima, there is nothing fundamental that we can say. So the assumption is that people are bargain hunting. For example, Ikeja Hotel fell last week, so some people are trying to uh, buy it when it's low. Hopefully, they get an increase in value in the coming months. The next slide will show what really happened in the financial service sector. Most of them were highly devalued on the stock market, not the company value itself, but the stock value. So it's the old core. The banks are very liquid and people sell when it comes to bond issuance. Like I said, the tier 2 didn't apply here. All banks are actually under 500. So the movement in price would not affect them. We'll be looking at the 8-map next and looking at what happened in the markets and like I said, the financial service sector was hit massively during the week, and the only stocks that increased in value, like we said, was Cornerstone Insurance. We have Mansard here that improved in value. We have Livingston Trust, just marginally, that's 0.76%. We also have FTG Insurance at 2% gain and Royal Exchange at 2% gain. The next sector we'll be looking at is consumer goods sector. So you see most of them didn't really move. We have a couple of companies that moved down during the week. Going forward, you only see companies with movements during the week. So you see the only company that gained here is Champions Breweries, and that's less than 1%. The next sector we'll be looking at is industrial goods. So we have Dangote Cement and Waco, the top movers. So you to have a better view, we'll not be using the market cap. We will just show all the companies that moved. So you see all of them also fell during the week. The next company, ICT, all fell, all lost during the week. Oil and gas, as we spoke previously, only Connoy gained in the week. Other companies didn't move up in price, and some of them are not traded at all. If you take it out, you see Seplat, Total, Eternal. We also have the services sector, same story, but we have Ikeja and Academy, just giving us a positive signal of green. Others are red and very red. Moving to the construction and real estate, only two companies moved during the week, and they also moved negatively. We have the healthcare sector, two companies moved, one positive, one negative. Others were 0% movement during the week. We have the agricultural sector, also red across board. We have the conglomerates, red, only UACN was green. Utilities, same story. Natural resources, same story. Investments, same story. So if you see what really happened in the market, it was a bloodbath mostly in the markets this week, and we hope to see recovery in the coming weeks. With the optimism, the market has actually done well so far. We still see it as over 50%, which is almost the same with what we did for the full year last year. So this is very good so far. So for our audience, if you see value in what we did today, I would like you to follow us on these platforms and to not miss out on our insights on the market. And you can follow us on Instagram, Twitter, that's currently X, Facebook, and even TikTok. We're on TikTok and we're providing this information for you on a weekly basis. Thank you for listening and see you next week.